360 billion euros of doubtful and bad loans, Italy's banks are in desperate need of new capital, putting the country and the EU on a collision course over a potential bailout. The problem is that without a lack of willing alternative capital providers, Italian Prime Minister Matteo Renzi wants to inject public funding into the system to try to stabilise it. But the rules of the European Banking Union forbid taxpayer bailouts as the first resort for troubled banks. The regulations that were years in the making insist that shareholders and creditors are bailed in before taxpayers are called on. So how would this work then?
They need a combination of two things. First, they need permission from the EU to set up a bailout fund, and then also they have to force the banks to recapitalize.
Italy signed up to the EU rules last November when it saved 4 failing lenders, but in the process it wiped out some 430 million euros of junior debt held by 12,500 small savers. Many of these savers said they had no idea their investment was so risky, and one pensioner committed suicide after losing his life savings. For domestic political reasons, Renzi wants to avoid Italians taking any of the brunt of the bailout, putting him at odds with the EU.
Well, it is clearly a problem. It's a lack of liquidity, and the Italian state is trying to work around ways to avoid triggering state aid rules to inject liquidity.
But whether Renzi's proposed capital injection would even be sufficient is another story, given the country's deep and prolonged recession and fragmented and inefficient nature of its banking system. Italy's economy and banking system have structural challenges that new capital by itself won't address, and has the heaviest public debt burden in Europe after Greece, some 133% of GDP. So how did Italy get to this point?
Well, there are several things. Like any bank, you can make bad loans and run into problems, and that's happened in Italy. And this is also the aftermath from 2007 and 2008, and also the inability of many of the European economies to recapitalize.
Over the past week, there's been negotiations between the Italians and the EU about the issue, but no resolution. Germany's Chancellor Angela Merkel and European Central Bank officials have refused to contemplate exempting Italy from the rules, with fears it could set a precedent for other European countries such as Portugal to follow suit. Italian political crises are nothing new, but post-Brexit, the prospect of a collapse in a national banking system coinciding with the rapid rise of a Eurosceptic movement would be the stuff of nightmares for Brussels. For CCTV, I'm Reuters reporter Jade Barker.